Hi, everybody. Welcome to the fifth episode of Crypto Clarified, Investing in the Truth. This is the podcast series where we come together once a month to talk about sort of all the biggest headlines in the space and trends that we see in the investment landscape. My name is Jason Guthrie, Head of Digital Assets here at Wisdom Tree. I'm joined by my co-host today, Benjamin Dean, also works as part of the digital asset team here at Wisdom Tree, and Camilla Russo, who's founder of the Defiant Media. Today, we've got some really interesting topics. It's been quite an eventful month. We're going to be having a look at some real-world use cases for crypto, given, in the context of some of the current events we're seeing today. We want to talk about censorship that's emerging in the space, as well as dig in a little bit to the Biden executive order that's come down recently. But before I get into that, I do have to go through a couple of compliance things. So to clarify, views and opinions expressed in this podcast are those of Wisdom Tree and the Defiant Media, and they're subject to change. Anything we present in this podcast is not intended to be relied upon as a forecast, research, nor as investment or tax advice. Information presented is not a recommendation, offer, or solicitation to buy, sell any securities, and reliance upon it is at the sole discretion of the listener. Information we present may be based on backtested or forecasted data. Please remember, past performance is no indicator of future returns. So, hi guys, 5 months. That's pretty good. I think that means this would be my third longest relationship ever. It's pretty good for me, I think.
Congrats.
Really interesting stuff this month, guys. So I'm kind of keen to jump right in. Obviously, a lot of the headlines have been taken up with the events that we've seen with the Russia and Ukraine, which is obviously a sort of very terrible world event to have happened. But we are seeing sort of some interesting stories around the use cases for cryptocurrencies for people holding value in Bitcoin, people who are worried about the stability of their organizations, institutions, mind you, looking to cryptocurrencies as some sort of a haven for this. And I've found this really interesting. And I think that this reminded me quite a lot of stories that you've told me, Ben, about what you observed in Venezuela. And we're sort of seeing this play out in another region.
Yes, indeed. So it's nice to be back. I can't believe a month's flown by. Cami, it's a pleasure to see you again. Jason, I see you every other day. So it's still a pleasure, especially when we get to clarify crypto. Indeed, the last month so eventful for relatively tragic reasons. Conflict in Ukraine and between the Russian Federation. That part of the world is interesting in the context of digital assets just because of how large the proportions of the population are that use different networks. The numbers can be hard to come by, but one estimate places kind of a ballpark being 10 to 12% of the population in Ukraine and the Russian Federation having used digital assets. Now, that's number 1 and 2 in the world by their estimate. Even if it's a few percentage points off, it's certainly up there as some of the highest ranked ones. When we've gone to look at local Bitcoin data, local Bitcoin is a platform where people can exchange Bitcoins with one another for fiat currencies, peer-to-peer. It's one of the longest standing and highest used peer-to-peer platforms. And Ukraine and Russia are number 1 and number 2 in terms of transaction volume in their region and rank regularly up there, very high. So you've got this kind of very fertile ground, highly technically gifted populations with a history of macroeconomic problems. And shock therapy in the 90s is well within the lived memory of folks who lived there. And now we've had this terrible event where there's lots of displaced people, 2.4 million in Ukraine already. And then Russian banks kicked off SWIFT, MasterCard and Visa pulling out. Macroeconomically, it's becoming very difficult for people there. But again, last time we spoke, Cami ran us through her experience in Argentina, which fortunately in the last 30 years hasn't had that kind of political upheaval, though it has certainly before then. Have you got any thoughts then about what you've seen, given your own background and your own lines of interest?
Yeah. So I think it's been so interesting seeing how crypto has been able to provide an alternative for people in Russia and the Ukraine. So crypto has been used to to transfer donations and contributions into Ukraine since the very start of the conflict, which was very surprising to see. Like the Ukrainian official Twitter account um, asked for donations in Bitcoin and Ether, and I think the third one, I can't remember the third currency, but then finally, like it became this kind of fight between crypto founders to be included in the list. So like Gavin Wood of Polkadot like came in and said you need to include a dot address, and I'll personally donate 5 million, and they did, and then the like Justin Sun from Tron did the same thing, and so on. But in any case, um, Ukraine was able to raise several million dollars from crypto donations. There was also a Ukraine DAO that formed very quickly after the war broke out, also raising millions. There is this popular kind of crowd funding platform, Gitcoin, who is also donating or directing a large part of this kind of. They're in a new round of crowdfunding, and they're directing those donations to Ukraine. So we've seen kind of multiple initiatives spring up in the crypto community,
Mm.
and it's been interesting to see that kind of the original use case of transferring money globally permissionlessly is actually being um, put to work, uh, and um, and and just like being effective in times of crisis, which is exactly what you'd want to see from crypto.
Well, yeah, I mean, it's these characteristics of like universally available and having very strong uptime and flexible in terms of like how people want to implement it, right? So you talked about how quick these things sort of spun up and got momentum, and that's sort of been the story of the space generally, right? We're obviously talking about, a relatively somber sort of rationale for this needing to occur, but the idea that the space is flexible and quick and that people are just organically doing it for a given use case, I think sort of speaks to why it's been so powerful and why it's been so popular, right? I mean, the idea that people are, in areas that are less stable, looking to this space for a solution isn't new. We saw it in Venezuela. We've seen it in
Mhm.
Zimbabwe and other parts of the planet that have had this sort of instability. Maybe what is a little bit unique on this one, which sort of leads us into the kind of second topic around censorship, though, is that coupled with this sort of need for people to find a safe haven and looking for ways for capital to kind of flow into to help one side, there's a big movement to restrict capital flows to the other. And in the form of the sanctions that have come down on Russia. Now, Ben, you already mentioned like removal of SWIFT. There's censorship on individuals. There's seizure of assets for oligarchs. These type of things. And we've also seen this coming into the crypto space, which is interesting. I think the two big stories that came out from this was MetaMask and OpenSea. And I think it's really interesting as a general topic to see how the space is responding, to align or not, as it might be on a service provider to service provider basis with the sanctions. But also this sort of question, and I know I've talked about this a lot with people over the last couple of weeks, is I thought the whole point of crypto is that it's decentralized and nobody controls it. Yet I'm reading these stories about censorship coming in, about services being denied. So how do you reconcile these things? And I know there's a lot to unpack there, but it's a very deep and interesting topic, I think.
It's one of these things where there's a whole history lesson that I can thrill people with. Ben's story time. This kind of decentralization thing traces back to Norbert Wiener and cybernetics in like the 60s. The idea of self-regulating systems. It had a new birth in the 90s with kind of the internet utopianism, John Perry Barlow and the Declaration of the Independence of Cyberspace. This idea that decentralization is good, more decentralization, decentralize everything, all the things. But then it runs up against kind of a reality and kind of not just pragmatism, but like existing economic systems and political systems, and what we're seeing play out now with these sanctions. Cami, I saw over the month that a popular way in which people access Ethereum, MetaMask, had started blocking users. I didn't see it was for the Russian Federation. I saw it was for a couple of other countries, but I know that you were keeping an eye on that. Like, what's MetaMask? How did that happen? And kind of what are your thoughts about the trade-offs inherent in interfaces like that to these digital asset networks?
Yeah. So what we've been seeing come up more and more in DeFi and kind of NFTs and just like what's supposed to be the decentralized economy in general is that the centralized entities that serve as gateways into these platforms are are censoring or limiting users' access, and we saw this with MetaMask last week, which actually it wasn't MetaMask that blocked access. It was Infura, which Infura is an Ethereum node provider that MetaMask uses, and which kind of if you connect to MetaMask, you're like the default is to use Infura in the backend to connect to like the Ethereum network, and so Infura has uh, blocked uh, users from certain countries, from Venezuela and from Iran. It hasn't updated on whether Russia will form part of the sanctioned list, and so what happened last week is that uh, Infura had mistakenly added Venezuela, um, whether before it hadn't done that.
Hmm.
So suddenly there were many Venezuelans tweeting and like posting that suddenly they had lost access to MetaMask when previously they had access. So you know to to me and to many people in like covering Web3 and in the space, it was just very surprising to see people lose access to DeFi via MetaMask, which is supposed to be a decentralized wallet. Like that's how you understand that what MetaMask is when you're using it.
Right.
It's non-custodial, it's decentralized, and it's kind of what you use to access DeFi. So that I think that's where kind of the difference in expectations is, because if you're using something like Coinbase to use crypto, you understand that's a regulated US based entity
Hmm.
and that it will likely have to comply with all sorts of sanctions and things. But when you're using MetaMask as someone in Venezuela, like that's what you're supposedly where you will supposedly find kind of a safe haven and this kind of censorship resistant feature that's supposed to be key in Web3. But suddenly, these users were being blocked. And the same thing happened with OpenSea. Like OpenSea started removing accounts from people in the same kind of sanctioned countries, and then recently it started removing accounts from Cuban artists, and this kind of like touches me personally because a lot of these artists are part of my own NFT project with Infinite Machine. These artists are artists in the Infinite Machine NFT project, and suddenly their pages on OpenSea were taken down. And from talking to them, like the reason they got into NFTs was because finally they found a way um, to post their art online without censorship, to find a global market, to monetize their art, and suddenly kind of they're being shut out just in kind of the same way that they are uh, with their authoritarian and dictatorship regime at home. So
Yeah.
I don't know. It's kind of
Well, this is an interesting sort of dynamic, right? That I don't think is a very easy one, but is probably something that needs to be, I don't know, talked about a little bit more. But there's this obvious to and fro between, let's say, the empowerment of the individual, which I think is hugely important, and I'm really passionate about. I talk about that with access to finance and things like this all the time. But there is then also an element of, what controls do need to be put on a system, when is or isn't the right time to gate these things. I don't want to get into a philosophical argument about sanctions and capital controls that are coming down on Russia, but there is a very strong argument as to like why these things are needed and why they come down for the right reasons. But that obviously does fly in the face of this idea of empowering the individual. So, I mean, that's something the space I think is going to need to square at some point, right? Or at least organically move toward more of a nuanced conversation. My impression is that people are very either or. They're either, hey, it's all open for everyone, we don't want any censorship, or hey, the government needs to control this. I kind of think it needs to come down somewhere in the middle, but
I think like there isn't one model and one answer for this. Like there will be centralized regulated entities to access crypto, and of course like those will have to comply with all sanctions and regulations. um, but there should be an alternative for people who want to access crypto in a peer-to-peer, permissionless, trustless way. I mean, that's what kind of this ecosystem is all about. So uh, I think there will always have to be, or there always will be, a path to use crypto directly, and crypto is about circumventing centralized entities, and just like free access to censor. I mean, it is literally censorship resistant
mm-hmm.
money. So it is made to circumvent censorship. And so what we're talking about here is the gateways into that system. Kind of at what point can they censor or not access? So yeah, there will be a centralized like CeFi crypto, but there will also be a decentralized version of it, and I think that that's very much needed.
Yeah, having the options there. Sometimes you could think of it like a spectrum. Often people say, is it centralized or decentralized? Like it's binary. But in actual fact, what you're saying more is there's a spectrum. At one end, you've got fully non-custodial wallets. You hold the keys to where you can transact with anyone else as a peer on the network, and it can't be stopped. The other end, you've got like these centralized regulated financial institutions with their own back-end systems who will happily go, well, maybe not even happily, go and block entire user groups by IP address. You know what strikes me? It's that the decentralized options, the issue around adoption has always been one of convenience. Like, why wouldn't people just use it if it's clearly better? Clearly, you've got control over your own keys. Clearly, you're going to be able to do what you want on the network when you have to. Yet people often trade that away for other elements, convenience. Sometimes they want the regulatory surety around it. User interface is better. It works on my device. There seems to be like some unanswered questions there that I speak it as someone who can sit there and configure those wallets myself. And I
Yeah,
just
but that's
know
not going to
that,
be most people, right?
yeah, and I mean, I have a cybersecurity background, and so you've got to
Mm.
kind of like be at that level of expertise to know that you can control these wallets with your own money in it. It just feels like there's a missing user layer or user interface layer that should be, I don't want to say easy to do, but if it was there, people would choose it.
Yeah, I mean, I agree with the usability point. I think there's also a point about trust in a system, right? So we talk a lot about censorship resistant and not having the people you don't want making decisions about what you can and can't do with your money. I think that does resonate with a lot of people too. Um, but I think there's a decentralization does come with other benefits too, like interconnectedness and
Mhm.
building a system without the silos or the points of friction that the current market kind of has. We see all the time like billion-dollar startups getting created to fix what should be very minor friction points. Like Venmo in the US exists as a billion-dollar company just to do peer-to-peer transfers of dollars because JP Morgan can't talk to Bank of America. and these is things that the system can kind of sort and fix, but we're short of usability layer to get in. But I also think there is this sort of trust element, and this comes back to this idea of central authorities in some degree exerting influence on a system. Maybe it isn't for like censorship reasons or capital control reasons, which again, we could argue for hours about, but for protection reasons, like assuming that, a central authority should be held to a standard of advertising requirements. It's not really reasonable to expect that everyone's going to configure their own things, that everyone would understand a smart contract or be able to order it. There's consumer protection rules in finance right now because mis-selling of products is a great way for people to lose their life savings. So, I mean, there are elements of this where bad actors will need to be able to be, I think, preemptive, have controls on them preemptively, or at least be held to standards that can be enforced. And that's going to need some degree of, authorities' ability to step in for the bare minimum reason of, if we want to see mass adoption, we need trust in the system. And that's not going to, I don't think, going to come solely through self-policing, right?
Potentially. I mean, I know at some point in this discussion we're going to talk about policy and legislation and regulations, but that does seem to be what's happening here. You've got the technology running up against national governments and geopolitics, and
Yeah.
that seems to be the unifying theme that's becoming quite stark this last few weeks.
Yeah. I mean, look, I quite like that there's opposing dynamics in the space, right? People with different, pretty pure objectives that are acting to kind of help the space develop. Like there are people out there developing this very open source sort of Web3 utopia, and they've got a view of what they see as being important: censorship resistance, freedom of speech, universal access to financial services. And these are really admirable things out there, and people are pushing that agenda through the communities they're building and the technology they're making. And then the idea that there are others out there that are much more focused on capital movements or geopolitics and are looking to exert some control from that angle as well. I don't view it as being a problem that we're trying to solve for multiple things. I like the idea that the place is organically finding the right middle ground through where the push is. I mean, that's how you get to good results. It's through sort of open discourse and people working on solutions and trying to move what they believe forward and see what gets support, mass adoption, gets a critical mass of people behind it. I mean, would you guys, I think this question comes up a lot, but like, what would you say to people that want to say that this incongruence sort of makes it, sort of takes away a lot of the benefit for it? Like if we say there needs to be some control, how can we possibly advocate for something that's decentralized and censorship resistant?
I think like nobody in crypto is advocating for like total like anarchism and like the dismantling of like regulation and government. I think the the framework is regulators and enforcement will be applied in the places where they have kind of jurisdiction. So when you're talking about kind of consumer protection and like marketing disclosures and all this stuff, those will happen uh, as they always do with kind of the companies building on top of this infrastructure. So um, if you are a Uniswap Labs and you're the company developing the Uniswap protocol and you're advertising something that's not true about Uniswap, then that's where regulators do have kind of the jurisdiction to come in and enforce. Um, but I think where the difference is to censor access to the infrastructure, to the protocol layer. I think that's where kind of the line is is kind of drawn,
Yeah.
at least from my perspective, from kind of people building in crypto. It's like, sure, like um, and enforce kind of all the regulations that you need in kind of the off-chain world. Kind of that's where that belongs. But kind of don't try to mess with access to the on-chain world. Don't try to censor that. and I think that, yeah, like it would be a real shame if that starts to happen.
Yeah, I think that's probably. I mean, we need. That's the kind of nuance I think that needs to enter the conversation, or
Mm,
at least the sort of headlines a little bit more. For me, this
mhm,
feels a bit like net neutrality, um, and like it's sort of accepted that the technology is here and needed. Now we're trying to work out exactly where the line is on where you exert control over it. It sort of needs to be the same thing in this space, and I don't think the public
mhm.
discourse is quite to that level yet. It loses that nuance.
There's another way to think about it, and it's not even net neutrality or SOPA PIPA. It's Phil Zimmerman in the 90s making PGP encryption public. And I agree with what Cami was saying. Like, well, one thing, did I hear you say that there's no crypto anarchists out there?
Well,
Because,
there's
like, don't look at my
Well,
Twitter
yeah,
feed then,
there is.
because
It's a minority. It's a minority, I think.
maybe it's just the people I hang
Yeah.
around with. But I hear you. Like, cutting people off at the access layer is like, all right, well, that's one thing. With the software code itself, you'll touch on it a bit with like Uniswap. In the United States, it's First Amendment. The government can't compel you to change speech in software code, and that was what Zimmerman's thing was about, making sure that encryption was publicly available by printing out the source code, taking it to the Supreme Court, saying the government can't compel me to do anything here. So we might start to see that play out in the United States. It would be a very interesting First Amendment objection. I haven't yet seen any attempts to compel software developers to change their code. It does seem to be at the operator service level where the compulsion is being applied. But we are entering that, as Jason, you say, like, we're at that moment. I'm not sure that the level of discourse should be more advanced given the history of the 90s with Zimmerman and given the crypto wars and everything throughout the ensuing 2 decades. Better be ready because there's lots of activity happening out of Washington at the moment, isn't there, Jason?
Yeah, well, I mean, we're segueing kind of very neatly to Biden's executive order here and sort of how it's progressing. I mean, I think this has been a positive move generally, but do you maybe want to run us through it really quickly for the people listening that aren't in the weeds on this? I know you've spent a lot of time this last couple of weeks analyzing it, Ben.
Yeah, so I lived in Washington 5 years ago, and I used to have to work on this kind of tech policy stuff. I won't bore you to tears by like giving you the full brief because you read these policy documents and like I get flashbacks. But what I will tell you is, so you don't have to, it's got 6 kind of policy goals around ensuring responsible development of digital assets. And policymakers think this way. They're trading off different goals against each other because they realize sometimes they're mutually exclusive. And now a whole bunch of people in 3 and 4 letter agencies have to write reports about how they're going to deal with each of these policy goals in tangible ways. There is one here, like the first one is around consumer, investor, and business protection. It's number 1, and that's not usually accidental. It goes into financial stability, mitigating illicit finance, make sure the US is at the front in economic competitiveness, give people access to financial services, and then make sure that like the technological advance isn't unnecessarily hampered. Cami, that first one there, I suspect, is one that you might be interested in, but you're probably also interested in the financial services. What did you think when you kind of saw this and found out consumer protection, financial services access? This is the kind of stuff they're thinking about.
Yeah. Um, I think in general the executive order was very well received in the crypto space. Um, I think like this had been a risk that had been looming over crypto for a long time. Kind of this overarching cross kind of agency view at crypto, and I think the fear was that it would have been a lot more kind of aggressively anti crypto, like just like looking to crack down and limit the development of cryptocurrencies. But um, the executive order kind of focusing on and mentioning things like the US not staying behind in the development of the space, the universal access to financial services, like all of those things obviously resonate very much with the crypto community. And it kind of signals that the US is recognizing the importance of the industry and the benefits that it can bring. And it recognizes the need of balancing consumer protection with encouraging innovation as well. And I think that's a pretty consensus view, I'd say, within crypto as well. So it was taken very well. I think um, uh, the crypto market, I believe, was up on the day that it came up, that this was published. So I think, next, obviously, kind of the devil is in the details, and we have to wait and see
Yeah.
what these policy recommendations and reports actually say. But just on the face of it, just like looking at all the different kind of points of focus, I'd say it was pretty positive. And I absolutely kind of believe that there should be consumer protection. But yeah, we'll have to see kind of exactly where that lies.
Yeah, look, I'd say it's stronger than that. I mean, you say it was pretty good. I think it was overtly good for crypto. Like, it's probably the best bit of governmental or regulatory news guidance we've had in a kind of very long time. Like, for me, this sort of puts to bed the concept that, you know, like, are they going to ban it? No, they're not. Like, this is a recognition of the technology, of its power, of sort of the desire for the US, the world's largest economy, to adopt the technology in some undefined way, but they see the power of that technology and they want to stay at the forefront of financial services. So they know they need to get on the kind of crypto train. And so there's this overt acknowledgement that that's the state of the world, which means, if you ever needed a sort of endorsement to say that this is here to stay, that this is a real development, that this technology matters, this is pretty good for that. I thought the other bit that was really interesting was there's an explicit point around the need for more financial inclusion. And that, for me, is another recognition of the potential that a system built on blockchain that utilizes these universally accessible stores of value and ways of moving money around and better record keeping and better property rights, all the things that kind of come inherently with this space, can be driven as a result of adopting this technology. So all of that, I think, is super positive. You'd have to really go out of your way to find a negative. I think particularly if you're taking a long-term view and you're looking for some leadership and you're looking for, a direction, like, it's really hard to find a negative in there. So I think overly we should all be super positive about what came out of that. I mean, obviously the idea of people might say that, yeah, the consumer protection piece, it's going to be regulated, but we've been saying all along that, like, regulation protection for consumers in particular is important. And I think as well, if we really want to get adopted, if we want the technology, we want cryptocurrency to see, like, mainstream adoption, not the first, 2% of the planet that have, got on board as early tech adopters right now, but the next 2 billion that want to come on, consumer protection and trust building in the system is going to be super important. So I think this is great for that as well.
You've been saying it for a long time. This is like how governments approach policy with new technology. They wait for it to get to scale, they see what the pros and cons are, and then they strike a path where they manage them. I was hoping, after seeing this, that, like, all these people who I've been asking for years about, like, will the government ban it? We're going to stop saying it. They would concede that I'm correct. Nobody likes being correct more than Benjamin C. Dean. But then did you see that news that came out this week from the European Parliament? Like, are they going to ban it? It turns out something interesting happened there. Did you see it?
The EU vote on the proof of stake?
Yeah. Well, proof of work.
Or proof of work, sorry, yeah. It was,
Yeah,
I mean, for those that aren't familiar with that story, there was a bit of legislation going through the European Parliament this week that was designed to put some guardrails around crypto, and one of them was to outlaw proof of work, right? Which was someone tacked it on last minute, and it was sort of a backdoor way of a politician trying to ban Bitcoin.
Yeah, it said that, so in the market in crypto assets draft, the crypto assets shall be subject to minimum environmentally sustainability standards with respect to their consensus mechanism used for validating transactions. Like, these people are meant to be technology neutral, and I'm not even sure which standards they apply for environmental sustainability, but it's that kind of language is now weaving its way through the system. So, yeah, sigh of relief from the executive order and Congresswoman Lummis, who's putting a bill into Congress. But then on the EU side, you see stuff like that, and there's
Was that scrapped, or is it
It
still?
failed. Yeah, it
Oh,
was voted down.
oh,
yeah, it
okay.
was voted down.
But
Like, it was in one
by
of
a
these.
slim margin.
Yeah, it was in one of these obscure working groups you find in places like the European Parliament. And they've now moved it to like the environmental taxonomy index, so it will reappear at some point somewhere else in the European Union organs. So keep an eye out for it. That's still happening.
That's so
thing,
strange.
it was really strange. The funniest thing I found in it was there was a provision for like a transitionary period for protocols to move from one way of doing things to another, which were really poorly defined. But it just sort of speaks to like they have no idea how these things work, how an open source protocol that's adopted by individuals is evolved, like how a change to Bitcoin's core code actually works. There's not a central group. It's not Google or Microsoft putting out a patch. So this idea that the transitionary period that was put in by the European Parliament is actually something actionable is just shows how little they understand the technology. So I think that was contrasted quite a lot to the executive order. I think we saw that European technocrats kind of trying to drive technology innovation is probably not the way to do things.
No First Amendment there either. Like, they're saying you've got to change your consensus mechanism. You swap that down in the US with a First Amendment argument. But in places in the world where that's not there, this is what comes out.
That's so strange that they would take like such divisive position on something like crypto, like the whole environmental argument. It can be counter argued with like so strongly, and it's it's been like such a heated debate all through last year. So it seems like very premature to already be trying to draft regulation around it. I don't know.
Yeah, and the word environment isn't in the US executive order. So, like, Cami, when we speak to people on the financial sector side, they say ESG, environmental social governance. In the same weeks when millions of displaced Ukrainians need remote access to financial assets, and a whole bunch of Russian citizens have been cut off from the world financial system, that's S and G in ESG. And the focus on this side of the Atlantic is the E part. It's kind of interesting to watch how that's playing out.
Yeah. Again, it's another one of those topics that desperately needs some nuance and seems to lack it quite often. It just is a shame when sort of something that is a non-nuanced viewpoint makes its way to the parliament floor. But at the very least, it did get voted down.
Yeah, it's good to hear.
Yeah. I mean, look, this is an interesting intersection between like where crypto sort of comes into, it's not just around like financial technology, but also kind of the legal system. You've talked a bunch about the First Amendment rights. Maybe the last thing to kind of touch on today is around IP rights. One of the news stories that hit, and it's maybe a little deeper down the crypto rabbit hole, but there was an acquisition of sort of one NFT project by another. And I don't know, I know this is something you've looked quite a bit at, Cami. Do you maybe just want to run us through sort of what went on with CryptoPunks and Bored Apes and kind of what that means for some of the IP rights?
Yeah, this is such an interesting story, and I recommend checking out our coverage at the Defiant. So what happened is that the company behind Bored Apes, Yuga Labs, bought CryptoPunks, the project developed by Larva Labs. So background, Larva Labs developed CryptoPunks like back in, I think, 2017. They were one of the first OG NFT projects, and they've really kind of taken off. and have become a representation of status and wealth within crypto. So people use CryptoPunks as their Twitter avatars, and that signals that you spent hundreds of thousands, possibly millions of dollars in this NFT, or what some people might just call it on a JPEG, um, and it's been kind of the gold standard of NFTs, and then Bored Apes has come to rivalize or compete with it in status. So Bored Apes is a project that was launched last year. Its full name is Bored Apes Yacht Club, and it was developed by this other company, Yuga Labs, and they have become extremely popular. So popular that the floor, which is kind of the cheapest price that you can buy one Bored Apes NFT, at some point surpassed CryptoPunks, and the beyond kind of like the community aspect, which it's really a social club that you join if you buy these NFTs, and you get invited to parties, and you're kind of part of this exclusive group of people. Um, but part of the appeal of Bored Apes is also the IP, right? Which is different from CryptoPunks. So for the Bored Apes project, the holder of the NFT has full Creative Commons kind of rights to the image, to the file, so they can commercially exploit their Bored Ape. They can create um, t-shirts and sell them. They can create a video game based off their Bored Ape. If they buy a bunch of Bored Apes, they can create a whole universe and commercialize that. So they can do whatever they want. Like, they really fully own that piece. And this is very different from the art world, where if you buy an art piece, you don't own the IP of the art. Like, the artist owns it. You can't commercialize your art piece. But in NFTs, this is becoming a differentiating kind of feature that on some projects, NFT holders actually fully own their NFT, which is super interesting. And the community and market were putting a premium on that, and that's why Bored Apes kind of surpassed CryptoPunks. And they are like, I think they're valued at like, I think like over $1 billion. Like, they're like unicorns. um and Yuga Labs, in the past, in last week, I think it was Friday, announced that they actually bought CryptoPunks. And so the implication of that, which hasn't been fully kind of announced or detailed, is that CryptoPunks will now have the same IP rights that Bored Apes and holders do.
Yeah, I think that's like that IP point is super interesting. Like the valuations of them aside is kind of one thing, and I think probably the collectibles space in NFTs is still in a bit of a bubble, right? But
Mhm.
that opinion aside, the idea that the market for these is pricing in premiums for IP rights, and that acquisitions are trading these IP rights for creative assets, and that there is sort of this whole conversation around like who owns what, who's going to profit, where do royalties go. That feels like a really transformative conversation for the way a lot of these creative industries kind of work. And I think it's really, really interesting that the market seems to be placing a premium on better IP rights. Like you didn't hear artwork trading on that basis in the past. And that's a really interesting dynamic that I think I want to watch quite closely. Um, it can change the way these things work, right? Creator economy has been a big deal. Like the way music rights worked for the industry on the back of Spotify kind of changing that business model was interesting as well. This seems to be an order of magnitude kind of more complex, which is, again, I think is super, super interesting development.
Maybe it's worth us clarifying that topic in future weeks. Here, I had hoped that we would escape, like I mentioned Sopa Pippa before. That was all about digital property rights, music on the internet. And it turns out that like it's just, I've seen this all before. keep saying it, but
Yeah, it comes in cycles and it keeps changing, right? So,
Mhm.
I mean, we've got IP rights for like digital art right now, but you can see very quick spillovers to like property rights for hard assets and how they get represented digitally, and what you can do with contracts if things are a little bit more enforceable, or, what it might do to the ownership of like your data. And if you can start to kind of tie ownership of that more closely to you and what you do with it, that might be your credit score or your internet activity, or 12 things I haven't thought of. So I think the implications for what is essentially like NFTs, but smart contracts, changing the conversation of ownership rights, that's a very, very interesting development.
Yeah, it's so fascinating. I think like one last point there is like something to think about, like where does this leave the artist? Because like, okay, this is great for NFT holders, but it's not so good for the artists. Like
Yeah.
they're the ones who created this, and now they're not as protected. But there are ways to kind of work a perpetual royalty into the smart contract, so that the artist is always kind of earning from the trading of these assets, and as they become more and more valuable, of course that can be super profitable for the artist as well. So I don't know, more nuance here to consider on whether this is a good or bad development.
Yeah. Well, I think that's sort of been the theme of
Yeah.
today's episode, right? Trying to put a bit of nuance into a bunch of these conversations. So, I mean, interesting times to be sure. But I do think that is probably all the time we've got today. This is maybe the closest we've gone to running on time. So I think we'll wrap it up here, guys. Thanks for joining me. Really interesting as always. I hope everyone listening found this useful and informative. If you'd like to find out any more information, please reach out to us, info.eu@wisdomtree.com. Thanks again for listening, and hope everybody has a great day.
Bye, everyone.
If you'd like to learn more about cryptocurrency trends, Wisdom Tree hosts a wide variety of research and educational resources. Visit our website at wisdomtree.eu/crypto to stay current on the latest crypto developments.